What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. Make sure you hit that like button if you haven't already. Make sure you hit that subscribe and notification button as well. That way you are alerted to when we release new videos. Thanks to all those who continue to tune in. We really appreciate it. Really like to see the channel grow, and welcome to those who are new to the channel. Now the nightly and weekend videos, like tonight's video, we focus on triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings and leaps as well. So if you want a deeper dive into exactly how we set up our charts, make sure you check out the bonus content on our YouTube page. We dive deeper into broadening formations, levels of support, resistance, things of that nature. And if you are not familiar with the STRAT, make sure you check out the link in the description of this video for the free quick reference PDF. This will give you everything you need to know to understand the basics of the strat, and really the simplest way to get a deep read on price action on all time frames. All right. So yeah, I do encourage you to watch the full video. We go through all time frames, so we give some pretty good insight. And yeah, let's go ahead and jump into the agenda. We'll go ahead and oops, that is the triggers and targets. The agenda for today is just going over the price action from today before we zoom out and take a look at the week, month, quarter, and year. Then we'll zoom back in, set our what we call our 4-hour markers and the triggers and targets for Wednesday, April 8th. And we'll also review the week, month, quarter, and year triggers and targets as well. So this, starting on the 5-minute chart like we always do, this is how we take advantage of our proven and repeatable strategy. That strategy is looking for higher lows at or above opening print, or the first traded price of the day. If you get those higher lows at or above opening print, you want to look to get into calls targeting overnight high and previous high day. If you get lower highs at or below opening print, then you will want to look to get into puts targeting overnight low and previous low a day. So today, you can see we had the open right here at this 54.32 level, right? So that's the first candle. We did push up and we hit overnight high, overnight high and previous high a day. All right. So those targets hit immediately, right? And from that point, we're just looking to see, do we pull back at some type of higher low at or above that opening print to get back to overnight high, previous high day, and see if we've got some momentum to get through there. Now, obviously, if we get above previous high day and overnight high, then we're no longer looking for the any targets in our proven and repeatable strategy. Those targets will have been hit, right? So we did take note of that today. We did come up, hit this overnight high and previous high day point. We actually did poke up above there just barely, so we did go 2 up immediately on the day. But then we pulled back, got what looked like was going to be a higher low, although it was slightly below or basically right at opening print. I'll give it the right at opening print. Whoops, come on, chart. There we go. But ended up putting in a soft lower high here, and we went ahead and took our chances. We know there would be a little bit of added risk just because we do seem to be more in a uptrend than a downtrend, like we talked about in yesterday's video from the 1-hour, 4-hour perspective. So we knew that we were probably going to take profit pretty quickly, and we went ahead and had a sell target at overnight low. That's the most extreme of the targets for the proven and repeatable strategy, right? So once we broke through previous low a day and hit that overnight low, we did sell half of the position, left the second half as runners to see if we could get some more push to the downside. And we did get the push up with the lower high. Did get a higher low, but we followed it up with the lower high again. So it did seem as though we were going to continue the push down. We did. We got back to this overnight low, and a little bit further than we did in the previous candle. So things were looking good. However, when this candle hammered up and we got this 2 up, we went ahead and sold a half of the remaining position, so a quarter of the total position as well, because it was starting to look like kind of a equal low, double bottom. Right now it's slightly lower on this low, but we did have this higher low in the sequence of pushing back down to this point. So 3/4 of the position gone here. And once we put this higher low in right here, we went ahead and sold the rest of that position because we were looking at the 1 hour, which again, we've talked about in yesterday's video, the weekend video, all last week. The 1 hour is really going to be the key. So if we, that's how we took advantage of the proven and repeatable strategy, which we use for early morning scalps, right? Or early entries into longer day trades. So we took care of that. Early morning scalps are out the door. But while we're doing that, we're continuing to watch the chart, especially the 1 hour. And let's go to this chart here. And when we go to the 1 hour, from today, there we go. Go to the 1 hour, we can see at that point where we put in the, let's make this bigger. All right, there we go. At the time, we made that, slightly lower double bottom on the 5 minute. That was setting up a 3, 2 down, 2 up on the 1 hour, right? And it was close enough to opening print that we wanted to go ahead and take our chances, right? We did make a lower low on the 1 hour, but we right at this point, we could look at this just basically as a broadening formation, right? From there to there is a broadening formation. From that high to that high would be another broadening formation, line of the broadening formation. So here you've got the 1 hour broadening formation that has been established by this 3 candle essentially, and you can see how it is what the broadening formations are based off of, right? So once we got this 3, 2 down, if we got the 2 up, number one, there was a decent amount of magnitude that could be had. It was close enough to opening print that we were feeling pretty confident that once the day flips back green, you start getting more bulls to join in the party as well, which helps push the price higher. And we're in the broadening formation, right? So until we make a lower high and then a lower low to actually start a downtrend, we're just in a broadening formation. So if we hit the bottom of the broadening formation, we should be headed back up to the top of the broadening formation. So we did go ahead and take calls once we went 2 up on the hour, held those calls. We sold half of them at opening print, previous high a day, just because, again, we've already hit that once. It could just be a day where we're just bouncing back and forth. So we did take profit on half our position there. We held out the rest for runners, and you can see we made the higher low on the 1 hour, right, and a higher high. So we are in an uptrend on the 1 hour. Although we are still in this broadening formation that was established basically Tuesday morning or this morning. So just got to keep in mind that we did make the higher high, but it is within the broadening formation. So we want to watch out for. You can see how this broadening formation crosses over right here at this 161.8 fib of the April 7th bull flag from 2025. So that level has been pretty important in the past few weeks. Right, being the basically the top of the range that we've been in for the past few weeks. Let's go to the 4 hour, make it easier. There we go. But you can see here on the 4 hour, this range we've been in for the past few weeks. Let's activate that. That 161.8 fib has really been the top of that range. And then, the 38.2 has kind of been the bottom, where we've had these look below and fail, look below and fail, look below and fail, big look below and fail. But again, that 161.8 fib of the April 7 bull flag from 2025 does seem to be the top of that range. So while we did get the higher low on the 1 hour and on the 4 hour, if you can see here on the 4 hour, it is a soft higher low, but we did put in a 3 on the first 4 hour candle of today to give us a soft higher low. And then higher high, right? So, it does appear we have the uptrend on the 1 hour and the 4 hour. But again, we have not cleared this level yet. We've got a daily broadening formation right up here. Actually, 2 daily broadening formations that intersect right here. 4 hour broadening formation, which, would fall in line with the daily broadening formations. And then just above that, a weekly broadening formation. So, don't... we are in the uptrend, but we're at the top of the range. So we do have to continue to watch for any type of look above and fail. If we do poke above, we want to see that higher low at or above that 161.8 fib extension, so that we can get that continued push higher up to the market maker's expected move high and beyond, right? Let me just fix this right here. I don't know why that says low. There we go. Oops. Okay. So, we've got the uptrend on the 1 hour, the 4 hour. We've made the higher low, a solid higher low on the 1 hour. We made a soft higher low on the 4 hour. if we take a look at the day chart, let's get something a little cleaner here. There we go. All right, we put in this soft higher low here and gone higher high in comparison to Monday's high, right, which was a higher high in comparison to Thursday's high, right? So we have this high, higher low, higher high. So in this, even in the day, we've got the uptrend going, right? So now one thing we do need to keep in mind is we did finish the day as a 3, right? So that still puts on, keeps on the table the possibility, even if we go 2 up tomorrow. We got to watch how tomorrow or Wednesday finishes. Whenever you're watching this video, we got to see how Wednesday finishes, right? Because if we get some type of push up in the morning and we get through that 161.8 fib, but then reject off of like the weekly broadening formation, and we fall back down, and we've got an inverted hammer as the day candle, right? That just could be the indicator that we're going to get that 3, 2 up, 2 down, which would take us back down here to this $52 level. So, and essentially the bottom of the range before we would get into look below and fail territory again. So, real tight range that we've been in, a couple of look belows and fails, very slight look above and fails right here as well. So again, we're still in the range. We've got to be patient. We've got resistance above in the form of this 161.8 fib, the weekly broadening formation. Market makers expected move isn't too much higher. Last month's high and this monthly broadening formation they're at 62 as well. So even if we get that push up, we got to make sure we get through those resistance areas. Maybe if we reject here, do we come back to get a higher low above this range to really solidify that as now support instead of resistance? That's what we're really looking for as bulls. Now as bears, you're still not too worried about the position that we're in, because the look above and fail could still be on the table, 3, 2 up, 2 down, that type of thing. So again, it's patience, just playing these daily plays, right? The 4 hour, 1 hour being very key, 1 hour especially. And there's not really any direction that's been chosen on the week, the month, or even the quarter for that matter, right? The quarter did trigger that 2 up, 2 down last quarter, but we're in this fresh quarter now, and we're back as an inside candle. Haven't re-triggered anything on the quarter. Matter of fact, let's go ahead and zoom out a little bit here more and take a look at the things that we're talking about here, right? So on the week, why I say we have not, the week has not made up its mind yet either, right? We went lower low, but it was after a higher high, right? With this lower high here, take it with a grain of salt. It was a 3 candle, so it's, in our opinion, is considered more of a soft lower high. So just more of a continuation, right? This is higher high, lower low. We're in this broadening formation, this weekly broadening formation, right? The purple lines are indicators for weekly indicators. So, and again, we got the 3, 2 down, 2 up that triggered this week. We're still in it, have not reached magnitude quite yet. Got to get up to that 58 area to reach magnitude. And that's when we'll really see, right? Do we put in a lower high with this candle? And if that's the case, then yeah, it does look like we'll probably be headed back down for further downside, 39.52 area, and if not lower. But if we push up, make a higher high in comparison to the soft lower high here, and continue to push up back into the larger range that we've been in for the whole year, then that does lend itself more towards the bulls, right? We are in full time frame continuity to the upside. If you look at the upper left hand part of this chart, we've got the week, month, quarter, and year. They're all green. So do want to keep that in mind as well. Yeah, it's just it's a daily trade type of situation, right? There are trends, but it's within a range. So we're not trading like from September to November, or from the end of November to end of January, where it's just a clear trend on a weekly and higher basis. We don't have that right now. So we just got to continue to play the volatility on the daily and 4 hour and 1 hour level, right? So talking about the month here, let's get a clean chart. There we go. We did go 2 up, 2 down last month, but and not only did we go 2 up, 2 down, but we went 1 combo 2 up, 2 down, right? Once we made magnitude of the 2 up, 2 down and went below that then triggered the 1 combo 2 up, 2 down, which should bring us back down to this $28 level. But again, we've started the new month inside on the month, inside and up, right? We're in the upper half of the previous month's price action. So if we do go 2 up on the month, that locks in last month as a higher low. And then we're just looking, do we make a higher high to continue the trend in the upward direction? At that point, looking at, all-time highs at the 74.21 level. Let's just bring that over here, right? All-time high over here, 74.21. So that would be what we're looking for. But at the same time, if things start to reverse and we pull back, that we could continue this one combo 2 up, combo 2 down, back down to that $28 level, right? On the quarter, we got to wait for the month to trigger, because if it does, if that one combo 2 up, combo 2 down does trigger to the downside, right? That triggers at the $39 level. Let's go back to the month, right? For that to trigger, that we have to go below the low of March, which is 39.52, right? So if we go to the quarter, we look at the low of last quarter is 39.52. If we go below that, then we trigger this 2 up, 2 down, which also has a magnitude down here at the $28 level. So it's in the bull's best interest to stay above that $39 level, because if we do, the floodgates may open, we may hit that $28 level, or it looks like it's a good chance we would hit that $28 level, because we've got multiple time frames with that as the the magnitude of their move. But we've got these other gaps below that could start to act as magnets on price action if we do approach that $28 level. So could come back and fill some of those gaps from that real nice bounce that we had in April of 2025, right? And on the year, not much to say here, right? We went 2 down, 2 up this year. Magnitude of that move was 70.08, which was the high of 2024, or the candle to the left of the 2 down. We reached that, and that's it. So just got to continue to monitor the year, watch how it finishes. Do we have a big candle on top? Do we have a solid big solid candle down here? Do we have maybe a doji on the year where we push down and explored price down here, maybe close a couple of gaps, but then pushed up by the end of the year? Just continue to monitor that, and wait for the year. Basically, got to wait for the year basically to end before we'll have any more indicators or triggers on the year time frame. All right. So that's what we've got from a zoomed out and a zoomed in view. I'm going to go ahead and zoom back in again, and let's take a look at how we will attack Wednesday's price action as it opens. One thing to keep in mind, on Wednesday we do have CPI, so there could be a significant catalyst for a more exaggerated move in price action. So just keep that in mind. Taking a look here on the 5-minute, again, just for the proven and repeatable strategy for early morning scalps or early entries into day trades. We've got our 4-hour markers out here. As of right now, overnight high is 57.35. Previous high day is 56.60. Overnight low is 56.35, and previous low day is 52.13. So pretty big range there, about $5 as of now. But let's just say, for illustration purposes, let's say overnight high. Oops, there we go. Let's say we get a big push, and let's say we get all the way up here, 58.50. Let's say we test the weekly broadening formation. That's a solid line going slightly from lower left to upper right. That is a weekly broadening formation. So we'll say that overnight high is there. Say it pulls back a little bit, and let's get the right tool out, and let's say we get a gap up at open. Put a slight gap up, right? Still somewhere in between the overnight high and overnight low. Well, that would be ideal, because what we would be looking for after we get this opening print is, are we getting higher lows at or above opening print, or at or below opening print? If we get higher lows at or above opening print, then obviously we want to get into calls. And then the only target that we have at that point is overnight high, because we're already above previous high with the gap up, right? Now, if we get, the gap open with the slight gap up, and we come back and close the gap, then go back up for some type of gap fill reversal, but end up getting the lower high at or below opening print, then you want to look to get into puts targeting previous high a day, overnight low, and previous low a day, all the way down here. All right, so obviously more magnitude to the downside, but we aren't in the uptrend. So even if we do get that lower high at or below opening print, previous high a day, overnight low, those are going to be first, in line as possible bounce points. We've got last quarter's 50% level, this 55.94. last week's high 54.09 and the week flip at 53.75. So if we go below 53.75, the week would go red. So I would look at those three levels as levels of support as well before you would actually get to that previous low a day. Now the one thing that, again, we've got CPI tomorrow, so I guess that wouldn't really matter because CPI should be out before open, so it wouldn't be something that would trigger to the downside after close. But say we get some other catalyst, some of that geopolitical news that we've got going on, if that hits us in the morning, then we could see that previous low day. But again, just remember we are in an uptrend on the 1 hour and the 4 hour. Okay. Speaking of the 1 hour, let's just take a look at that really quick just to make sure that we understand where we're at with that. Again, we've got, make this bigger for those on the phone. Okay, there we go. So we've got here's today's or Wednesday's price action, where we have the higher low, higher high. So there is that uptrend that we talked about. Again, overnight high, as of right now at least. The daily broadening formations that we've got right here, the top of those daily broadening formations, this weekly broadening formation, those are all going to be levels of resistance. Even that market maker's expected move, I don't know why this is low, high, that should be a level of resistance as well, at least intraday. And again, that market maker's expected move, if you're not familiar with it, check out our weekend video. We dive deeper into that, but it's derived from the option exchange. So it shows where the open interest is in relation to the at-the-money straddle and the money strangle. So that is definitely a level of significance. It doesn't mean that we hit that level and reject and go down or just go sideways, right? Market maker's expected move is correct about 70% of the time, but there is 30% of the time where price does go beyond that point, and this week may be one of those weeks. So just keep that in mind. But again, in the uptrend on the 1 hour. Same with the 4 hour. We've got the uptrend with the soft higher low here. Come on. There we go. We got the soft higher low, right? But again, the 2 up, 2 down is a possibility, especially with CPI tomorrow. If CPI, if the market doesn't like the CPI print, then we could open instead of the gap up back within the previous day's price action. And then once price opens, we could get people, that are selling, expecting good CPI or bad, however the CPI comes out. But we could get that added pressure by sellers during the day that would push us down and trigger that 2 up, 2 down. If it does, it would bring us back down to that 52.13 level, which was, the low of the day on Tuesday. But again, even if it gets pushed down, we're looking at being back at the bottom of this mini range that we've been in here for almost 5 weeks now. We've got support of last month's 50% level. The high of the resistance area from the end of 2025 is 50.76. So if we are going to stay in this uptrend, we should establish what was resistance as support. So that should be a support as well. And we've got the month flip right below that as well. So the month would flip red. So I would look at all of those levels as support as well. So even if we get that 2 up, 2 down, let's not get too far over our skis. There is some thin level some retracement that could be done here, right? Thin structure retracement. I apologize. And so, you do want to keep that in mind if we do break below that April flip. But until we do, I wouldn't be thinking too much of this, right? Now on the day, again, we put in that soft higher low. Come on, Thinkorswim. We put in the soft higher low today, being that today was a 3 candle. Come on now. What's going on? There we go. So today was a 3 candle, so we got the soft higher low, pushed higher high in comparison to the previous day's high, but in comparison to the high of the range, we still have not broke out yet. So keep that in mind. We could be doing a little look above and fail. If we do, then it would be marked more than likely with some type of inverted hammer type of candle for the day, right? But again, if we are going to go 2 down on the day, we've got quite a ways to go. We'd need the right catalyst there. But, again, even if we do, we've got these levels of support that are right below it. Let's go ahead and zoom. Actually, let's go to the notes at this point. We've looked at charts quite a bit. So here's the notes for Wednesday, April 8th, 2026. There will be 186 trading days left in 2026, and we know the close price on Tuesday, April 7th was 56.55. We know that the week, month, quarter, and year are all green. Those are the levels that would flip them red. We know the market maker's expected move was plus or minus $7.67 from the close on Friday, giving us an expected range of 60.42 to 45.08. And we know that we have no gaps above, but we got a few gaps below, quite a ways below us, but they are still there, so they could act as magnets on price action, in the long haul. We talked about from a early morning scalping perspective, we want to look for higher lows at or above the opening print to get into calls, targeting overnight high and previous high a day. And we're also looking for lower highs at or below opening print to get into puts, targeting overnight low and previous low a day. Now, on the 1 hour, we talked about the two up, two down possibility, triggering at 54.60 with a magnitude of 53.39. But if we continue to the upside, we've just got that two up continuation, triggering at 56.60 and a target there at 57.98. On the day, if we go two down, that gives us, on the 4 hour, if we go two down in that first 4 hour candle, that will give us a two up, two down, triggering at 53.39 with the magnitude of 52.13. So not a lot of magnitude there. But if we do continue past that, we've got some extended targets for you. And at the same time, if we go to the upside in the first 4 hour candle tomorrow, we get that two up continuation, triggering at 56.60 with the targets of 57.98 and 58.25. Who knows? We may be past that by the time we open, depending on how this after hours goes, right? So, maybe blown past those targets at that point. We've got a couple of more higher up targets for you here on the day. So if we go to the downside, again, we've got to get all the way down to that 52.13 level. So we got to drop $4 basically immediately. So, not saying that it won't happen, but not a high probability. But if we do, 52.13 is the trigger, and we've got some targets listed out here for you to the downside. At the same time, if we go two up, that gives us a 3-2 up, triggering at 56.60, and we've got some extended targets out here for you as well. On the week, we talked about, we did trigger the 3-2 down, 2 up. We're still in force as well because we're still above the trigger, but we have not quite reached magnitude of 58.25. If we do and we continue on, we've got a couple extended targets out there for you as well, which rolls us into the month of April, which we're still an inside month, right? We haven't gone two up or two down yet. If we go two down, that does continue this one combo two up, combo two down, triggering at 39.52 with a magnitude of 28.12. We do have some intermediate targets here for you. That would be possible levels where price could bounce, go sideways, or you could possibly add, right? Those just points of inflection in between the trigger and the final target for that move, or the magnitude for that move. If we go to the upside, then we got the two down, two up reversal that triggers. Got to get above that 62.82, but if we do, magnitude of that move is 72.36. Again, intermediate targets on our way to the magnitude of that move, right? So these are points where price could either reverse, go sideways, or you could end up adding. At the same time, if we reach magnitude and we've still got momentum, we've got some targets to the upside, including that all-time high of 74.21. On the quarter, we have the opportunity to go two up, two down if we get below that 39.52 level. And we talked about it earlier when we looked at the charts. The magnitude for that move is 28.12, so a decent move to the downside. But to continue the trend, or I don't want to say the trend to the upside, but just to continue the two up, higher prices model, or higher lows and higher highs from a candle to candle structure perspective, we've got to get above that 72.36 level, and we get the two up continuation. First target being all-time high of 74.21, and then we've got some extended targets listed out here for you as well. All right, we talked about on the year, we went two down, two up. We triggered and ran to the magnitude, so the strat has been run. Nothing else to really say about this until 2026, really. So just continue to monitor it and just watch how the year ends. All right. But there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Really tried to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. If you did enjoy today's video, a thumbs up goes a long way. It really helps the channel grow. Again, we're really glad with the community that we've started to build here. We like the interaction that we have with everyone, the comments and questions that we get on some of the videos. They're great to have, and it just shows that we're doing something right here, right? And that's all we want to do. We just want to provide a little bit of information to make trading a little bit easier for folks out there, right? Get retail a little bit of that money that the big guys get, right? And that's the key. So if you enjoyed the video, again, thumbs up goes a long way to helping the channel grow. A share also goes a long way to helping the channel grow. If you think of someone that could use some of this information, go ahead and share the link. Again, we don't say you need to use our whole strategy or even any of our strategy. But if you find some, useful information that you can add into your strategy, then we're here all for it here on this channel. And if you have any questions, just let us know in the comments, right? So that's what we've got for today. We'll end the video like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. We hope you, if you're watching this on Wednesday morning or during the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.